the longest time, when we thought about the industry of casino gambling, we had only one thing in mind: Macau, just the greatest gambling story of all time. We had many U.S.-based casinos, and they were okay investments, often depending on how well they did at the gaming tables, or more importantly, how much money they made by lending to gamblers. Oh, they tried their hands at Atlantic City, but it didn't bring in much money for them. Didn't really work. But then in the mid-2000s, Sheldon Adelson, a true visionary, and Steve Wynn, another visionary, opened casinos in the greatest gambling mecca on earth, and that's Macau, the curious adjunct to the People's Republic of China, where the gambling-enamored Chinese could lose fortunes at all sorts of gaming tables. I've rarely seen a more profitable set of years than the times these two casinos expanded in Macau, and I recommended them over and over again and fast enthusiastically on the show, shying away, particularly from the domestic operators, as being dowdy with no growth and often with too much debt. And it worked and worked and worked, until one day we got a new president, President Trump, and he decided to take on the government of the People's Republic of China. The result? Well, the greatest gambling story of all time came to a screeching halt. Now, you might say, it doesn't matter. Vegas is booming. They could make it all up there. No way. Especially not with a pandemic where crowds, what you need more than anything if you're going to make money in the hospitality, and particularly the casino business, have been basically outlawed. The result? The stock of Las Vegas Sands, which I used to call Macau Sands because it derived so much of its profit from there, is now down 29% for the year. The stock of Wynn, which had been one of the greatest investments of all time, no longer has Steve Wynn and is now down 42% for the year. That's a staggering loss, but was widely acknowledged. By far the best operator in the business. But you know what people didn't count on, particularly the analysts who covered the industry? Two things. One is that the regional casinos would continue to be popular and actually do better in the time of COVID than the big dogs. And second, gambling. No, not casino gambling. Actual wagering on professional sports. Now, I have long believed that gambling could be the way out of a lot of the budget crunches states are having. I feel that same way about cannabis. I also thought that there could be ways to make it more exciting by taking it out of the sober world of predicting winners and losers like they do on regular TV into the actual real gambling world with spreads and overs and unders and big money and, of course, fantasy. Now, it's beginning to happen, and it's happening in a way that is extraordinary. The ironic thing, though, is it didn't happen with Wynn. It didn't happen with MGM. Certainly, it didn't happen with Las Vegas Sands. It's happening with an outfit called Penn National Gaming. That's who's capitalizing on it. You see, Penn National's Jay Snowden decided to go all in on gambling of all kinds just when COVID hit at the same time. And he handled the pandemic better than just about any company in the industry. Remarkably well done. Most important, he decided to join forces with an electric outfit, Barstool. That's the multimedia entertainment company run by CEO Erica Nardini that stars David Portnoy among a terrific supporting cast. Now it's on the verge of launching its sportsbook, and the excitement has driven this stock up 185% as investors realize that Barstool may be the best and most efficient way to bring in wagerers, particularly young ones, right into the virtual casino and then to the bottom line of PENN. We caught up with Penn National's Jay Snowden, along with Barstool's Erica Nardini and Dave Portnoy, to find out the prospects on the eve of the sportsbook. I wanted first to know how Snowden pulled it all off. Here's what he had to say.
I think we do a good job. We know how to operate. We know how to deliver great service, whether it's in a retail brick and mortar or with these two on our digital products as we roll those out. And this was an opportunity for us to reimagine what we do and how we do it. And we've taken that opportunity, whether you're talking about marketing efforts or procurement, non-gaming amenities, what customers really want, hotel products. And we feel like there's some real structural change that we can pursue here. This is a transformational opportunity for us right now. And I think what you're going to see as time goes is that the margin improvement opportunities are real, something that regional gaming hasn't seen in decades.
He's a terrific operator, isn't he? You know what else has been difficult? The process of gambling itself. While I can't gamble, I looked at Penn National's app, and I think it's going to be a winner. Dave Portnoy, who says he will keep his new day job as Davey Day Trader, which many of you I know get a kick out of, explains it this way.
You really had to go out of your way in the past to place a bet, whether it's illegally with like a bookmaker, which you shouldn't be doing, offshore casinos, which felt like you were getting your credit card information stolen. So the element that, somebody who maybe was casual can now do it easily, I think will lead to obviously a much bigger market.
All right. All that is well and good, but how much money can really be made here? Because that's the trick with the stock, and that's what we care about. The analysts are thinking it could be just maybe a $5 to $6 billion gambling opportunity. But Erica disabused us of that notion.
It's an exponential on that. We're going to make gambling cultural. We're going to make it the way we engage with sports. And we're excited to do that. So I think there's no limit on it. I would put a T behind that number, not a B.
That's T for trillion. Now we're talking about the size of the treasury markets. She also explained that while Dave Portnoy is Barstool's star, for sure, it's a much larger entertainment company itself than people realize.
We are now the biggest publisher on TikTok. We're the fourth biggest podcast publisher in the world. We're the sixth biggest distributed media company in the world. So we continue to grow by leaps and bounds because we're making content that's different. Our fans love it, and we respond to that.
Here's the bottom line. I like this story. I liked it at 30. I liked it at 20. I liked it at 10. I even liked it at 3-4. I think that gambling is gigantic, and this and DraftKings, another publicly traded company, are really the only games in town, the only way to play it. Therefore, even at a $10 billion valuation, up usually for the year, I think Penn National has terrific prospects. If you believe, as I do, that gambling, legalized sports wagering, will be as big as Macau was 16 years ago when we first arrived, I think the combination of Barstool and Penn, that's a great one, and it will work even higher as the football season progresses and gambling goes virtual almost all over the country. In the end, I think Erica is dead right. This is a colossal business, and the scarcity value here says that if Penn Nat stock comes down, it did run up too much today for my taste, then you've got to take advantage of it, and you got to buy. Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.